Alright, welcome to this new video. In this video, we're going to lay all the puzzle pieces together. Everything you learned this far inside the mentorship has all come together inside this trade. In the coming few minutes, you will see an edited version of one of the live streams where I break down the whole trade. And using these concepts, guys, you can use it for yourself in the charts to get funded, get payouts, make some amazing trades. So I hope you enjoy. Without further ado, let's dive in. Here we are at the higher time frame. This was during the weekly outlook. And I mentioned we had a tap into the fair value gap, but the bodies are respecting the fair value gap. We're closing above the 50%. So I want to see higher prices towards all-time high right here. So higher time frame perspective is higher, internal to external. Then let's go to the 4 hour and 1 hour to look for a market maker model. How does a market maker model look like? Well, first of all, you have your original consolidation. So this is just a place with lots of failure swings. It was here, like all those failure swings. And I mentioned we shorted. I didn't short this move because I kept saying we are in the weekly value gap. We will go higher. I'm not going. I struggle with shorting a move when I know the most money is to the upside. So Thursday and Friday live on stream, I faded both moves. So then on Monday, I mentioned, okay, what we have created, you have Sunday fair value gap on the 4 hour and right here, this move. So smart money reversal. This is the starting point of your market maker model. And you want to see it being respected when it trades into it. So it did like trades the fair value gap and then boom, it shut up. So this was Monday. I mentioned we shorted Monday. We short this move down because I said we first going lower inside this order book from the smart money reversal, but we need to hold. I've said this maybe 20 times. We need to hold this order book. We need to hold it for the market maker model to complete. And then the market maker model is complete once we hit or these highs or all-time high. I took my profit here. But you can let's do right here. I was a little bitch there. I was a little greedy there. I had a few K profit. I was like, okay, let's just take it. No runners. Okay. So it was Monday. So higher time frame, weekly internal to external, 4 hour and 1 hour. We are expecting a market maker Bible. That's your intermediate term perspective. And now let's go to the smaller time frame, 5 minutes and 15 minutes. Also 1 minute, but let's do 5 and 15 to see what kind of entry model you can use. So here we are on Tuesday. And I mentioned in the Telegram group, if you expect higher prices, what will be like the wet dream of every trader when you want higher prices? You want a deep London downward move. And look what Santa Claus gave us. Look at how deep this move is. And then you saw aggressive sells out of the range, aggressive buys into the range. I took a position here, and I got stopped out by here. I also had a bigger position. That's the one that went to TP, and my stop loss was below the candle here. Because if your trade ID is intact, when the last fair value gap, of course, keeps holding. It's your last line of defense together with this order book. My stop loss was below here. I took 2 entries around here. There was my entry I shared also in the group with the went to TP. But let's go over a few concepts here. First of all, the Judas swing. Accumulation in Asia, manipulation in London, and then you expect a expansion in New York. What do you see here? This is the staircase effect. And now let's see, where can you find an entry? Go ahead, higher. And we're now approaching London. Where could you find an entry? First of all, you have this fair value gap. You have a second fair value gap. This should have been game time. Why? We are already in the New York kill zone. It's 710. It's inside your kill zone. It's allowed. If you miss this, you could have taken it here. 7:30. 8 o'clock. All this time you knew your bias was higher. Why? Like on the lower time frame, this just looks like shit, right? But you are in a weekly internal to external. you are in a 4-hour market maker buy model, and the order book is holding. You see how the candles are respecting the order book? That's why I said yesterday on stream, and also earlier this stream, we are going higher very aggressively, but we just need to have, like, the New York sessions were very difficult. Like, we're going to see it in a second. Because the money was already made here. Like, look what happened here. Seek and destroy during AM. And then during lunch, we expanded. So, okay, if you didn't have an entry on Tuesday, that's fine. Let's go to Wednesday, because the same thing happens on Wednesday. Okay, we are approaching New York, 2 a.m. So currently, we had this expansion. Is there any 1 hour for value gap where you can trade upfront from the 1 hour? I don't see any significant one. We already stepped into this. Let's see the 4 hour. The 4 hour, and I mentioned this in the Telegram, we have basically 2 points of interest. This is before London, so this is Wednesday London. Your bias is still higher. You are inside a market maker buy model. You have 2 points of interest. This is the fair value gap video from the mentorship. You have a fair value gap, and you have a volume imbalance right here. So these are your points of interest for London. So then you go to lower time frames again. What do you want to see? Where you have a higher price in mind. Accumulation, manipulation, London, into one of the two or both. Point of interest before going higher. Let's see. London. Sells, buys, respecting the volume imbalance. So accumulation, manipulation. This probably, we have a possible low of the day inside a higher time frame point of interest during the London kill zone, where most of the time high lows of the day are being formed. And we're still expecting high prices. Why? Market maker buy model, and we are in a weekly internal to external on a higher time frame. So here, first fair value gap is your confirmation. Second fair value gap is game time. And if you have this is a mini market maker buy model. You see this? Where's your consolidation? Failure swings? This is a mini market maker buy model. It's fractal, this guys. And if you are from the sell side of the curve to the buy side of the curve, you want down close candles or blocks. They should respect price. And the most nice ones are the ones that have a overlapping fair value gap. So here you see price trade to the fair value gap and move away. Here, we trade over the down close candle. We come back here. We leave the value gap. And now we go higher. Another one, fair value gap higher. Another one, fair value gap higher. So you're in a buy program. And the thing about this is, guys, because this already happened on Monday and Tuesday, Wednesday doesn't need to wait for anyone. The smart money, it has their back. They're ready to go. And that's what you're going to see. And so we saw the live stream during New York. Here starts New York. Little A and D here. Accumulation, manipulation, distribution. And then, alright, is the open. And from that point, we just went. At 10 a.m. during news, we had still another opportunity to get in. Like, there were like 20 opportunities to get in the move. But on the lower time frame, there's lots of noise. But you were still inside that market maker buy model. And then, you've seen it yesterday on stream, we just went like a madman. There was no stopping in queue. And yeah, that's the base of the trade. So, but I think this is basically every concept you learn inside the 2024 mentorship in one trade. So you use the weekly outlooks for your higher time frame point of interest. You look for market maker models on the 1 hour, 4 hour, and the lower time frames. You go.